Welcome to Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. The Trump administration raising the stakes in its criticism of Fed Chair Jerome Powell. The Fed receiving grand jury subpoenas from the Justice Department, which threaten a criminal indictment over Powell's testimony about the Fed's renovation project. And this time, Powell is speaking out.
I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president.
The news rattling markets as the so-called Sell America trade comes back into focus. Dow futures showing declines when the opening bell rings. NASDAQ and S&P 500 also pointing to sharp losses at the open. And with the fear trade back, front and center, investors are fleeing to what they see as safe havens, especially precious metals. Gold is smashing through a new all-time high, around $4,600 an ounce, and silver is also at new records. And investors are also waiting for earnings season to get underway. Airlines and financials in focus this week as things heat up on Tuesday ahead of the opening bell. But the banks are also facing new pressure from President Trump as he called to cap credit card interest rates at 10%. Let's get a check in on stock futures. We are seeing some of those bank stocks helping lead the early losses here this morning, especially those with large credit card portfolios, but also the news about Powell really rattling markets. Dow futures right now pointing to a drop of more than 300 points at the open. S&P futures off by more than 0.5%. NASDAQ 100 futures pointing to a drop of about 0.75%. And indeed, federal prosecutors have launched a criminal investigation into Federal Reserve Chair Jerome Powell. Government officials say the probe is related to Powell's testimony last summer about the central bank's building renovation project. Powell responding in a video statement saying it's part of President Trump's continuing campaign to pressure the Fed to lower interest rates. Our Federal Reserve correspondent Jennifer Schonberger is joining me now with the latest. And just an extraordinary turn of events, Jen, especially at a time when it seemed like tensions between the administration and the Fed chair had abated to some degree. And of course, Powell, right, he's a lawyer. He's a very plain-spoken and sort of soft-spoken guy. But it's pretty clear from this video that this is a strong statement.
Very strong reaction from the Fed chair last night, Julie. That's right. Just to recap what you said, Fed Chair Jay Powell facing a criminal investigation into his testimony before the U.S. Senate this past June when he made comments about renovations of the Federal Reserve's headquarters here in Washington. In an extraordinary video message, Chair Powell revealed Sunday night that the Justice Department served the central bank Friday with grand jury subpoenas threatening criminal indictment related to Powell's testimony before the Senate. Powell suggesting this action isn't so much about his testimony as it is about a difference of opinion in interest rates, which threatens central bank independence. He stressed what he called, quote, unprecedented action that should be seen in the broader context of the administration's threats to the central bank. Take a listen to Chair Powell.
The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation.
Now, President Trump has denied any knowledge of this investigation, telling NBC News in an interview Sunday night that, quote, I don't know anything about it, but he's certainly not very good at the Fed, and he's not very good at building buildings. When asked whether this was pretense to try to pressure Powell to lower rates, Trump said, no, I wouldn't even think of doing it that way. What should pressure him is the fact that interest rates are already too high. Powell said in his video message that over the course of 4 different administrations spanning both Republicans and Democrats, he has always moved to set interest rates solely on the congressionally mandated goals of maximum employment and price stability, and will continue to do so. Julie?
And Jen, it's interesting because if Trump is trying to get Powell to lower interest rates, it seems like that this could backfire in various different ways. We know that Powell is done in his term as Fed chair at the end of May. He might stay on, though, still as a member of the Federal Reserve. So there are questions about whether this would sort of sway him to stay on. You also have Senator Tom Tillis, who is a Republican from North Carolina, who is going to be leaving office, that he is not going to approve any of President Trump's appointees to the Fed while this is all going on. So there's a lot of questions now about what ripple effect this is going to have.
Absolutely. And you're seeing that today in the markets with bond yields. You know, if it is that Trump wants lower interest rates, then you do need lower yields on treasuries. And if there is a question about central bank independence, that indeed is going to backfire. At this point, you know, Chair Powell has really held restraint in responding to the president, trying to keep tensions cool. The fact that he came out with this video message, of course, coming after unprecedented action from the administration, almost feels like both sides are in an all-out war. The question now is whether Treasury Secretary Scott Bessent, who has sort of been the adult in the room, moves to sort of cool tensions, or whether Republicans in Congress create some sort of an off-ramp here. You mentioned Senator Tom Tillis. He is one who has said, hey, I'm not going to support whoever the next Fed chair is, because frankly, this action from the administration is a warning shot to whoever the next Fed chair is going to be. And all of the different candidates, from a National Economic Council Director Kevin Hassett to former Fed Governor Kevin Warsh, who are supposedly the top two picks, have said they will indeed move and support central bank independence. But this is sort of a shot across the bow, which is, if you don't do as I say, I will move to bring criminal charges to push you out so that I get what I want. And so this is a very interesting, shaky moment here for the central bank, for our country, for financial markets. And we're going to have to see how this plays out and if we see cooler heads prevail.
You know, it's interesting. We've been watching the poly market odds on both the next Fed chair and some of the other questions around it. There is not a broad expectation that Trump is going to be successful in pushing out Powell. Although, to your point, it doesn't matter if there is this threat hanging over the head of the next Fed chair. And in terms of the odds on the next Fed chair, Jen, it still remains Hassett. But, you know, at this point, they keep teasing, the White House keeps teasing that we're going to get this at some point. We're going to get the actual news. Any new indications on that front?
Not at this point, but I will say it's interesting to see whether Fed Chair Jay Powell will indeed not just step down as chair in May, but whether he steps down as governor, because his term is not up until 2028. So the question is, does he feel that he needs to stay on board in order to protect central bank independence? And are there other members of the FOMC who are going to coalesce around Chair Powell right now? And whenever the new Fed chair comes in, creating some pushback there. We already know there are a number of hawks on the committee right now who do not support lowering rates further. So this is going to be interesting to watch.
Yeah, we're going to talk to Jason Furman much more about this in the next hour. Jennifer, thank you very much. Appreciate it. Well, stocks falling after the Department of Justice opened that criminal investigation into Fed Chair Powell. Concerns about the central bank's autonomy reigniting the Sell America trade for now. Joining me now, Keith Lerner, Truist Chief Investment Officer and Chief Market Strategist. Keith, it's good to see you. In your most recent note, there is one sentence that stood out to me, given the events of the past couple of weeks. You said, flexibility and tactical awareness are essential for 2026. That might be the understatement thus far of 2026 on the flexibility front, for sure. And we do have more news hitting today, as we talked about, in the form of these threats to Fed independence. So how do you stay flexible? How do you respond to a news item like that?
Yeah, well, first, Julie, always great to be with you. And you didn't mention it. In our outlook, we called it the seventh inning stretch. But we also said you'd also see some curveballs, and those curveballs you don't know sometimes that they're coming. And you can argue we've had two curveballs already with the situation in Venezuela, and now with what's going on with the Fed investigation as well. So, and we're in a midterm election year, and historically, the one thing that we pointed out to our investors in a midterm election year, you tend to have a pickup in volatility because of some of potential changes along the way. So to your point, that's a long way of getting to your point about staying flexible. I wouldn't overreact to any one headline, right? But it does suggest that we have to pay attention to this. And this upcoming earnings season that's coming up, which is going to be crucial because to us, even though we've had all these different concerns over the last year, earnings have been key. So we're not making any substantial changes yet, but we're obviously monitoring the situation closely. And I think diversification is key.
Diversification key here, but are there implications for rates? And would there be signals that the market was sending that would indicate that there is a rising fear that Fed independence will be challenged and that there's less credibility when it comes to setting interest rate policy?
So some of the things that we're looking for around the concerns or questions about Fed independence is the bond market reaction and inflation expectations. So, and also the dollar. And what are we seeing today? Well, we're seeing a modest shift in each of those. The 10-year, it's up about 3 basis points, so not severe, but it is moving up. You are seeing the U.S. dollar weaken about 40 basis points as well, and you're seeing gold up. So what does that say to us? Well, one, we've been positive on gold all last year. We still see the benefits of having gold as a diversification in a portfolio. We still think that makes sense. And even though we still maintain this modest U.S. overweight, we've been increasing our international exposure over the last year. And one way the international markets benefit is if the dollar weakens and the local currency increases, and you're seeing that today. So that's the way we're thinking about the world more generally. And I would say, lastly, we've been Team USA for several years. We've been bringing that in because of several developments, and this just reinforces that global diversification is really key.
So in other words, Keith, it's not as though you're saying, jumping on the quote unquote sell America trade per se, maybe lighten up on America or rebalance a little bit towards international. In other words, maybe a little bit more nuanced than just the sort of sell America trade.
Yeah, and the way I think about it is, we're not making the changes because of the headline today. I would say relative to where we were 18 months ago, we have more international than we had before and a little bit less U.S. than we had before. But we still have that tilt. And also, when we have news headlines like this, I also don't want to get lost of other factors that will matter. I mean, like I said, the earnings season, the AI theme is still alive and well. I mean, just over the weekend, you saw this announcement by Walmart with Gemini, and Walmart stock's up 3%. That's not a recommendation on Walmart, but it's just saying, hey, this AI theme and this move to adoption is going to be really important. And ultimately, earnings drive the stock market over time. So I just don't want to, this matters, but it's not the only thing that matters. And corporate profits, I would say, over time matters more.
And Keith, I'm glad you talked about corporate profits because I want to get your take on the gap between that tech earnings growth and everything else, or put another way, sort of growth versus value, which is that debate's come back into the fore recently, right? We've seen values start to creep up a little bit. And I know the expectation is the growth still expected to outperform value, or tech's expected to outperform in terms of earnings, but the gap's closing a little bit. Is that enough of a justification to see continued gains in some of those value stocks?
Yeah, the way we're thinking about this is kind of similar to the U.S. international story. We still like tech and communication services long term. Those are legacy positions. But I think it's not either or. I think it's both. I think unlike in the past where it seemed like the tech trade was it, what we've done in our sector strategy over the last couple of months is we went to a overweight in industrials, which is more of that global kind of uptick in the economy. And then we also upgraded healthcare as well. And then more recently in December, we were underweight energy and materials. We upgraded those as well. So I think this boarding trade, which it seems like everyone talks at the beginning of each year and it hasn't worked out, we're actually seeing it actually start to work out. And the difference this year, or heading into this year, we're seeing those earnings borne out as well. So it's being supported. So I would just say it's a combination of both, but I would not get rid of your tech at this point. I just think there's more opportunities beyond tech is the way I would think about it.
The broadening maybe has finally arrived. Keith,
maybe.
Thanks a lot. Appreciate it. Good to see you.
Thank you. Great to see you as well.
Thanks. Coming up on Morning Brief, we'll bring you today's top trending tickers and count you down to the opening bell. We'll be right back. Now time for some of today's trending tickers. We are watching bank stocks, Exxon, and Sun Country. Markets and data editor Jared Blickery is here with me now. And let's talk about the banks first of all, because we've got them. We've got credit card companies in focus. President Trump called late Friday to cap credit card interest rates at 10%. He has set a deadline, I believe, of January 20th for them to do this. It's unclear whether it's on existing credit cards or whether it's on new credit cards. But what is clear is that it's affecting a lot of these banking stocks, which are trading sharply lower.
That's very true. And this is the beginning of earnings season, and we're going to get some commentary from JP Morgan probably tomorrow on this very issue. But for the meantime, this goes back to Trump's campaign. This was a promise he made, and so maybe this is a fulfillment of it. Jeffries is saying this is dead on arrival in Congress. This would probably exceed his presidential authority, so it could be challenged. Nevertheless, as you said, it is affecting many of these stocks. And if we go to the Wi-Fi Interactive, I'll just show you, I have our credit card heat map here. We have a lot of the big banks. We also have Visa, MasterCard, American Express. And the background color and numbers, like all that green, that is 1 year performance. But then the pre-market is those little boxes. You can see everything's in red. That means almost everything's in red. There is an exception, and that has to do with Affirm. Affirm is up 2%. But you take a look at some of the smaller players like Capital One. I'm circling that now. That's down almost 7.5%. Synchrony is down 9%. Bread Financial, that's down 11%. And with respect to Affirm, I got an interesting comment from Wells Fargo here, saying that direct impacts would be felt within the interest-bearing loan portfolios of buy now, pay later names like Klarna and Affirm. However, if general availability of traditional credit card loans is reduced due to rate caps, the attractiveness of Affirm and KLAR 0% products could increase. Why would there be reduced availability? It's because of supply and demand. Banks can only issue so much credit, and if they are forced to pay or forced to charge a lower rate, there's going to be a lot more demand for that credit at lower rates, and so that just means there's going to be a scarcity of credit. So that's another thing that's not going to be addressed here.
Well, and also a scarcity of credit because they maybe will react by not offering credit cards and not approving credit cards at all to those lower quality borrowers. The average percentage that people pay on credit cards, interest rate that people pay on credit cards is actually above 20% when you average them all out. And that's because lower risk borrowers are, lower risk borrowers effectively subsidize higher risk borrowers to some extent, right? And you have the banks charging to take on that increased risk. If they can't charge that to take on increased risk, maybe they just won't take on the risk.
Yeah, exactly. Anytime you start price fixing, you do need to address the supply and demand issues because there's incredible demand when you have these artificially lower prices. So I don't see any suggestions that there's any thought about this. And if this does go through Congress, maybe it will be addressed. But let's face it, that's not going to go through Congress this year. Probably not.
It doesn't feel that way, but we'll see what ends up happening. And let's also talk about, and this is another political story, ExxonMobil, because Trump-related headlines are also putting pressure on that stock. The president threatened to keep the oil giant out of Venezuela after comments from CEO Darren Woods saying the country is uninvestable. The shares are just down about 0.8%. And by the way, is it such a terrible thing if Exxon is kept out of Venezuela? Because whatever companies get involved there, it's going to cost them millions, billions of dollars to get the oil out of the ground and to other markets.
Yes, and they need a tremendous infusion of capital. I think Trump's figure is $100 billion in private capital, and it's going to take years. It will take a decade to double their production up to 2 million barrels per day. This is a very long runway that we're talking about here. But as to Trump's comments, that was just I think you said this in the open, that was in response to Darren Woods calling Venezuela uninvestable. And so there's a little verbal sparring here. Yeah. It looks like Exxon maybe doesn't want to participate, but even if they're not forced to shell out all that extra private capital, maybe there will be some blowback at a later point, and I think that's what might be being reflected in the share price.
Yeah, and by the way, ConocoPhillips made similar comments talking about the risks of investing in Venezuela. Both of those companies had assets seized by the Venezuelan government and have been in court for years trying to get money back from some of that. There's also, by the way, the backdrop for oil prices, not just from what's going on in Venezuela, but now increased tensions in Iran, with protests continuing there over the weekend and a number of killings of protesters being reported. The administration here is reportedly considering some sort of intervention there. If that happened, again, there could be implications for the oil markets.
Yeah, nevertheless, crude oil is pretty close to 4-year lows right now. So, yeah.
Yes, not seeing much upward pressure on oil at the moment. And finally, let's talk about an airline deal. Sun Country shares are jumping as the company is getting acquired by Allegiant Air for $1.5 billion in cash and stock. $18.89, I believe, is the value for each of those Sun Country shares, Jared.
Yes, and so that represents about a 20% premium. And in any M&A, you have to pay above, well, you don't have to, but you usually pay above the market price because you want to incentivize the shareholders to just let this thing slide through. So 20% is about as expected. We've seen some bigger ones in the past. I looked up in JetBlue, Spirit. Remember that deal from 2022? That was a 38% premium, so almost double that. Alaska Hawaiian in 2023, that was a 270% premium. But Hawaiian was a distressed asset, so it was just artificially, it was a fire sale situation. And we're seeing the stock right now. Let's go to the Wi-Fi Interactives of Sun Country. That is up 13.5%. So not fully reflecting that 20% just yet. And by the way, this is a 1-year chart. So you can see it's basically flat, just barely positive over that time period. And on the open, that 13.5% will be reflected. So it'll be a bit higher than that. But nevertheless, let's go to the other stock, Allegiant, and we're seeing a 6% decline there. And in terms of the cost, this is not only cash, but also stock. So $4.10 cash plus 0.115 Allegiant shares per Sun County. And that amounts to about 6 Sun County for 1 Allegiant.
Yeah,
share.
and by the way, the companies have said that they are confident in getting regulatory approval, which has been an obstacle for some of these discount airline deals in the past. So we'll see if that is indeed the case. Thanks, Jared.
Thank you.
Appreciate it. Coming up on Yahoo Finance is Opening Bid. Our executive editor, Brian Sozzi, is joining us now. Soz, what's coming up on the show?
Well, Julie, your credit card conversation reminded me I have a lot of rewards points. I got to cash in. I'm going to do that after the show. I can put it towards my gas. Of course, we're going to stay on all things Federal Reserve, really an unprecedented situation. And then in a rare interview, the CEO of Perella Weinberg, Andrew Bednar, stops by for a chat. Looking forward to that one.
As am I. Brian Sozzi, thanks a lot. Appreciate it. That does it for Morning Brief. You've got Opening Bid next on Yahoo Finance.